and Venture series, Founder Stories from A to Z, where we speak with founders about their experience from day one starting their company to now raising multiple rounds of funding. Today, we are joined by Rich Kane, the CEO and founder of Virgo. Introduce yourself and tell us a little bit more about Virgo.
Yeah, absolutely. Hi, Maggie. So Vergo is a financial platform for businesses inside the construction, design, and architecture world. Happy to kind of walk through a bit about my background, how I kind of landed on the idea. I worked in finance for about 10 years, was lucky enough to travel around the world, lived in London, Argentina, Brazil, came to New York in 2017, and did various different roles in finance, from like on a trading desk, operations, finance, strategy, technology, kind of like managed to do a lot of different cool things, but always had this itch to kind of go off and build my own thing one day. And when I was working at JP Morgan, I had a few different side hustles, which kind of consumed my side life, I would say, to a point where I was just like, I think I'm ready and itching to kind of like quit the corporate world and go off and do my own thing. So I built a small furniture business. My wife and I moved into this tiny apartment in the East Village. The pain point was that we couldn't find any furniture to fit the space. So I went down to Home Depot, bought some wood, started making furniture for our apartment. Loved the experience, rented a workshop in Brooklyn, started doing it at a bit more mass scale, turned it into a small website, realized I wasn't a particularly great carpenter, flipped it into a marketplace, found other carpenters to build for us, pivoted that business into an interior design studio exclusively for startup founders. Kind of the insight I had there, that I was learning more about technology and startups, realized that they had a pain point kind of buying furniture for their offices. This was obviously pre-pandemic. And that business kind of really took off, had hundreds of thousands of dollars in projects. I was kind of like project manager, finance manager, like managing all of the kind of expenses myself. And the biggest pain point that I had from that experience was kind of like tracking the expenses, paying vendors, receiving money from clients, and just how messy it was. Kind of like as a finance guy, what frustrated me the most was like, why wasn't there like a system to kind of like manage all of this? And you have an accounting system which kind of does the books, you have project management software, but you didn't have anything kind of in the middle, which was like managing the day-to-day finances. So kind of like how Brex, Ramp, and some of these like, you know, platforms designed for startup founders, technology companies have approached things. Virgo is a kind of a checking account. We have a credit card. We have expense management software. We're doing bill pay. Basically want to own every kind of like dollar that moves around for these businesses. So kind of the background on Virgo, how we came to be. And yeah, I reached out to the Forum team back in like early 2021 and kind of pitched this concept, and they were like willing to give me that first $100,000, which was really a game changer, because I guess like raising money is really hard, but like once you get that first check, everything changes. So yeah, happy to dig in whichever direction you want to go from there.
So how did you go from there must be a better way to then launching it? How did you make that leap, or why did you choose to make that leap into being a founder?
Yeah, I think it's just like, I guess like being an entrepreneur, like it's just something you can't really escape from. It's kind of all consuming. If you're at 2 o'clock in the morning doing a side projects every day of the week, 7 days a week for several months, it probably means that you're not like born to be like in a big corporate job. So it's very clear for me that I had to escape that world, but like looking for an opportunity that was actually going to be potentially like a big one and warrant my time, an investor's time, and potentially have like a big outcome. So a lot of it was also about like business model construction. So I'd say that like one thing that we did a lot of research on was, what could this look like if it actually becomes like really big? So obviously the exercise of like the addressable market size, like obviously construction is a huge industry. There's no like, you know, doubt that it's a huge opportunity, but then it's like, how do you construct a business model around that? And kind of like what we had was this very ambitious goal, which was, how do we actually become the bank for this industry? Which is kind of hard to kind of like build in many ways, because it means you are dependent on so many things going right. One is like getting a bank partner to kind of like work with you and sponsor you. One is like launching a credit card. One is like building all the software. So fintech is, I would say, like super hard. It's like you're doing so many things at once. You're trying to build software, work with partner banks, set up a processing system. Like all these different pieces have to go right. Which I would say kind of like it's good and bad, right? It means that it's harder to like really get started, but it also means that there's a very compelling story there for investors when you're trying to raise money. It's like there's a real reason why I'm raising money. It's because the upside is astronomical, and we need money to actually get to that like next major milestone. So yeah, that's kind of like the thought process there. And I think Forum kind of saw that from the early days from our team, which was, yeah, like they do need actual money to build this. There's a real use case and there's a business case for it. And we think this is the right team to do it.
How did your MVP, or your minimum viable product, what did that look like? And how has that shifted even from joining the accelerator to then raising your first round? And how has that changed to this day?
Yeah, so I think the MVP was basically me and my experiences of like running this myself. So I think that having that founder story where you're like, I've done this and I know people in the industry that are doing this as well. When I actually built that interior design studio, I actually built software myself for it to kind of like automate some of this. So that was kind of like the version 0. Then it was more like, okay, is this really like, how do we de-risk this for investors and be like, is this really something that everyone else experiences? So it was kind of just a landing page, to be honest with you. It was here is what we're building. There is a wait list. Are you interested in signing up? So pretty much the summer of Forum Ventures was de-risking for like raising that seed round, which is, okay, this is our theoretical products. Do people want this? So it was like, really like gunning it for like 3 months on building as big as wait list as possible to kind of like really prove there are people out there. So that was like cold calling, running ads, like randomly talking to people on the street, going to like the Home Depots of the world. Like, and I think that's kind of what got the Forum team excited, and other investors was like, okay, they used their time pretty wisely, which was like, they couldn't go and really build like a bank. And yeah, we could have built some like, expense tracking software for like those 3 months, but ultimately demand trumps a lot of things, I think, and proving that there's something there. So that's kind of like how we approached the first version. Then we raised our first like major round of funding at the end of 21. And then it was like build mode. So then we got the partner bank relationship. We built our first product, which was the checking account and the software that we had built to kind of track expenses. And I don't know, going back to like the Y Combinator sort of mantra, which is, build something, like launch something as quickly as possible. That's kind of what we did. So we had a checking account, some basic expense management. We had a mobile app. We like went to market. And that was kind of like really the MVP. And what it did was exposed a lot of interesting insights to us, like, realizing the bar for fintech is pretty high. Like people want stupid things like Face ID and, all these different tools. So that's kind of like the MVP. And then from there, it was more just like listening to customers and then trying to really hone in on like, who is our ideal customer? Like, who do we want to build for? Because the construction industry is so gigantic. And I think what we learned was like, we were seeing strong pull from like many different sides of the market, like from larger businesses to very small businesses to kind of somewhere in the middle. And that goes back to like the business model. It's like, okay, how are we actually going to make like money off of this? And we realized that like larger businesses are probably like a better segment for us to focus on. And that kind of was the decision making. Okay, well, let's launch the credit card next. That was the next phase of the product, which we've just launched. And then let's build a web dashboard, because these people don't live on their phones as much. They actually sit on a computer. So I would say that's like build like the first, minimal product that people need, see where the pull is coming from, and then go in that direction, which obviously from a business model point of view also makes sense. I think a lot of people make the mistake of probably like thinking exactly they know exactly who their ideal customer is and exactly what they need, and just like building, and then never getting that feedback from the market. we kind of did the opposite, which was like try and be as scrappy and launch something ugly as possible, as quickly as possible, which is kind of working in our favor, but it's still hard, right? We're still learning.
You mentioned that first check into your company was so pivotal in growing the business, and then I imagine the second one as well. So now, if you think back to from the day you decided to launch to now, you raised your seed round almost a year ago, I guess in June. Yeah. How has your role as a founder and CEO changed from those very early days to now, and what were some of the learning curves that you went through?
Yeah, so previously to receiving the first like check from Forum, I was funding everything myself. I was like basically paying for salaries. I was using all of my savings to do everything. And it was kind of weird because the second I received that first check, I was like, okay, I'm no longer like a small business owner. I'm actually, I have investors and I have to make them happy. So a lot of it's about like communication, I would say, is like something that changed a lot. It's like you can't just sit in your room for like days on days without like talking to anyone. I would say a big part of it is like having, regular check-ins with investors, communicating the mission, communicating how things are changing. I think like keeping them up to date with like, why are you changing in certain direction? Like, is there the data there? Like, why is this happening? I think like we did board meetings. We started board meetings, I would say probably too late. I would really encourage founders to do it like very, very early on in the journey, because it just gives you that pressure and the awareness of, at the end of the day, there are these investors out there that are going to be like sponsoring your business and your ideas and your vision. And if you don't get that feedback from them, and you don't think about like, because they're the ones that are like capital market experts at the end of the day. They're the ones that know that if you go out to raise tomorrow, you're probably not going to be able to raise because of X, Y, and Z. And it's good to know what X, Y, and Z are. Obviously, investors aren't going to help you define your product roadmap, and you're the one that's ultimately responsible for that. But yeah, I would say from that first kind of like check-in to now, my role has become much more around, I would say like, obviously still heavily involved in like products, but now I'm managing a team of, I think there's like 12 or 13 of us right now. So trying to find people that are accountable for each of the pockets that make Virgo successful. So someone that's responsible for like lead generation and growth, someone that's responsible for like, sales and like closing deals, someone responsible for like technology, etc. So it's very much like taking a level up where you're almost trying to find like very strong people to take that weight off of you, and that you're more of like an oversight of everything and just making sure the important stuff is getting done when it needs to get done.
Can you point to a time where that was most rewarding in your journey, or I guess alternatively, what keeps you motivated through some of the challenging times?
Yeah, I think we're like product people, right? We absolutely like love product like launches, and every time there's like a feature or some like big product milestone, that's when the whole company gets like super buzzed, I would say. So recently we just launched like our credit card, issuing the first credit card, seeing the first transaction, seeing the first repayment, or the first time a check deposit was put in, or the first time someone, I don't know, like did everything we wanted perfectly, and there's no more customer support queries, and like you're like, wow, people are using Virgo on a daily basis. There's people like retaining, they're not like churning. Like those are things that keep everyone just like super motivated and very excited. And I think that there's like obviously millions of times where it's been super hard and challenging, and obviously with the economy, not doing so well anymore, and a lot more pressure on like fundraising, etc. It's hard to ignore all of that, of course, but I think ultimately like what keeps me like super buzzed is that our team are like phenomenal like product builders, and at the end of the day, that's all that matters. It's like if there is a problem that we're trying to solve, and that there are customers that are like willing to try that solution and test it out, and we know there's like 5 other things that they need, it's on the roadmap, don't worry, we're going to get there. That's what keeps me alive, is like it's there is demand for this. Like, it's not like it's more of a timing problem. It's like, we are building them what exactly they need, but it's more just like, it takes time to get there. So I think that's what keeps me very motivated and excited. And just the fact that like, one day I'll probably walk into like a Home Depot or something and see someone using like a Virgo card. That's kind of like in the back of my mind all the time about this could be like, you know, the Uberization of this industry. It's like, that's very exciting for us.
Lastly, what kind of advice would you give to startup founders, so early stage founders who might just be launching their product or who have yet to raise funding? In those early days, what advice would you give?
Like, just the awareness of, you ultimately are going to be successful if you raise money is always what I would try and like hammer home to people who are in that early stage. It's, of course, product market fit is super important. Of course, it's about building an amazing product and getting customers and getting traction. But it's also just the awareness of like how you present your business, how you pitch your business, how you think about like a business model. And I have the luxury that I came from like a financial background. So it's like it was part of my daily job to put presentations together, financial models. Like, so it's much easier, I would say, for me to like talk one-on-one with an investor about, I know exactly how they think and they want to see information presented. So anyone that doesn't have that background, I would say, obviously, like, try and learn it as much as possible. Or maybe that means you need to get a co-founder in the team that does have that kind of awareness, or hire like a fractional person to help you or something, or just learn from others in the community. But like, startups are this kind of concept where it's like people are investing for like giant ideas, right? They're not investing for a small business that after the seed round, you're going to be profitable and then everyone's happy. That isn't the game. It's just like, know the game you're in. It's like, this is trying to get VC back returns. People want big outcomes. So getting on the same page and being like, okay, shit, like, we need to actually build a really solid business model, very, very good at presenting that business model and vision. That's going to make fundraising significantly easier. And it's also going to put a mirror in front of you and be like, oh, actually, maybe this isn't a good business model. Like, maybe there's something else. And that happens at all stages of businesses. I think, like, even today, like 2 years into this, we are putting that mirror in front of us and being like, okay, interest rates have gone up. What does that mean for our business? Like, the business model has changed fundamentally in the last like 2 years from what it was. That means we have to get more deeper into the business model. Do we have to charge subscription? Do we have to do, I don't know, net financing? Like, that, it's always evolving. So yeah, that's something I would really recommend to early stage founders, is be super aware of the game you're in and how to put together a good business model.